How hot has the deal market been the last few months? And is that momentum expected to continue into 2021?
Good morning, Brian. Great to be here. Look, Q3 2020 was up 10% for private equity buyouts over the same quarter from 2019. So like you said, a big surprise for a lot of people. Anecdotally, right now, I think the deal activity is verging on the red hot, and good visibility going out into the first half of 2021. That's notwithstanding the fact that a lot of investors hit the pause button late in Q3 and early Q4 as the U.S. presidential election loomed on the horizon. With that behind us now, I think the deal activity is just going to continue to surge forward, particularly for private equity buyout activity.
Yeah, and I know that interest rates, the 10-year has ticked up a bit, although nobody's going to sit here and say 0.9% is high by any means. It is higher. Money is still flowing. There's about $4 trillion in cash sitting on the sidelines, as much of that controlled by private equity. How much do low rates play into this deal story?
Well, it plays through on the deal story on a couple different fronts, right? First of all, I think everyone expects low interest rates to continue for some period of time till we start to see meaningful wage inflation. That lays out a good intermediate term horizon, right? Cheap debt can fuel a lot of PE buyout activity very easily. As you said, $3.8 trillion in private equity assets sitting around, $1.7 trillion of dry powder ready to be invested. Combine those two, I think you're going to see continued activity. And interestingly enough, those two facets are going to drive the returns that private equity would expect, because you're going to see increasingly higher multiples for purchase prices. Historic yields from private equity, normally trading 9 to 10%, say 15 years ago, over public securities. Now, with all that dry powder and with those low interest rates, market observers are expecting to see yields from private equity trade at a 3 to 5% premium over public securities.
I would imagine at Dechert, you're bulking up your distressed division, because we know that, yes, there's a vaccine coming. We know there's optimism around broader economies next year and into 2022. But let's be clear, credit markets still remain very tight. Everybody I talk to says that we're going to see more defaults. The distressed market is going to go up. Where do you see specifically those opportunities, Mark, and when do you think they may start to hit?
So, Brian, great question. I think everybody, was waiting as we entered last March, thinking that there was going to be a wave of bankruptcies. We saw some, but not nearly as much as anticipated. A huge amount of liquidity being provided by governments and by the private markets, really created a Band-Aid that got put on a lot of companies that were deeply troubled, right? As their revenue plunged, their overall leverage increased radically on a relative basis. As you said, right, with the business pickup hasn't come in a lot of sectors yet. Nothing's happened to ameliorate that. As we get into the end of the first quarter of 2021, a lot of those Band-Aids or waivers that were put into place throughout 2020 are going to start expiring. And a lot of those businesses are going to be hitting the wall. I think you're going to see a few things coming down the pike, all correlating, but you're going to see increased restructurings coming into the end of the first quarter, increase in the number of bankruptcies and the distress activity that it translates into. Secondly, companies that are doing okay, think about larger companies, they can't grow their way out of the intense leverage that they're in right now. So you're going to see an increasing number of asset sales or divisional carve-outs coming onto the market as companies sell assets in order to pay down debt and balance their leverage. And then I think for the sectors that are in vogue and producing good economic return, the private equity story is going to be about increasing demand, chasing those assets.
Shepard Smith here. Thanks for watching CNBC on YouTube.